Nice to see everyone today. Thank you so much for joining our Growth of the Build-to-Rent sector. This is a hugely exciting topic. I think that it's so interesting to have different types of conversations, and we want this panel to be very collaborative and everyone talking amongst each other, so please, I encourage that. We're going to do quick introductions. My name is Michela Hancock. I am Managing Director of Development and Construction at Greystar, and we came into the build-to-rent space and the student space 6 years ago in the UK. We manage 500,000 units globally in 150 markets, and it's been really interesting coming into the UK, learning about the market, seeing the differences in the US versus the UK, and going along this journey with the growth of this sector. It's been hugely exciting working together with a lot of our so-called competitors. We like to call everyone friends, so I think it's been very collaborative, and I'm so excited to see the next wave of the build-to-rent. So anyway, I think we'll all take about 3 minutes to introduce ourselves, talk about what your company's doing in the build-to-rent space.
Great, thanks. My name is Kotecha. I'm from AmroLiving. AmroLiving is Amro Real Estate Partners' build-to-rent platform that we've established not so long ago. So just to give you a bit of background, we're slightly unconventional, if you like. My co-founder and I are both economists by training and background. We actually don't have that many typical RE sector professionals with us. We tend to recruit quite widely, which I think is a great strength of ours. We went about 11 or so years ago, we took our cue from the GFC and looked for defensive counter-cyclical asset classes within real estate that we could invest in, and student accommodation fitted the bill perfectly with its robust income streams and its big sort of supply-demand gap at the time, and we went into that. And within that, we then scoped down to our niche, which at that time was postgraduate studies. After the global financial crisis, I don't know if you recall, but education and further education was quite a safe haven for many who had suffered attrition, and we went into that sector, and not long ago, about a couple of years ago, we then looked at build-to-rent, having very similar income and counter-cyclical defensive characteristics as student. We study the sector which is called multifamily in the US, and it's done phenomenally well over the last 25 years. Michela can tell us more about Greystar's experience there, which is amazing. And we saw the opportunity to not only serve our student demographic within the residential sector, but we saw a broader opportunity for good quality, purpose-built, managed residential. And clearly, I mean, we're not going to be able to answer the housing crisis issues ourselves. We're a small part of that sector, but I think we can challenge the sector's thinking, the conventional thinking, by coming up with a product category that is robust and essentially decoupled from the housing cycle, if you like. So that's where we're at. AmroLiving is a tech-enabled real estate business, as we'd like to see it being called, and we tend to want to be nimble about about our product mix and our product design, and also how we operate and service our customers. So I'll talk more about that later.
Hi, I'm Rosanna. I'm the Acquisition and Development Manager at You. You are placemakers, developers, designers. We are the #1 residential brand in the world. We've got 52 projects around the globe, and we're now moving into the build-to-rent sector, which we find quite interesting because in the UK, branded residences hasn't really been a thing. We struggled to get branded residences off the ground in the UK, but as we look in the build-to-rent market, you see that places like TP and things like that, brands are now becoming more well-known. So it's quite an interesting space for us to take what we've been doing for the last 20 years and apply it to a new product. I guess where I fit in all of this, I actually run the small asset investment and development team, but I'm also the token millennial that gets wheeled into the office when we're working on products and things like that, and I go, no, that's not right for the market, no, you need to change that, like, nobody wants to live there, who is your target market, blah, blah, blah. So I kind of I guess I put all my beliefs and trends onto the product to make us relevant to the build-to-rent market. And yeah, we're doing exciting stuff. We're working on building the brand, working with younger professionals at the moment to really create the brand at the beginning rather than retrospectively, so it's quite an interesting place to be in the market.
I think that's hugely interesting as well because, again, that interaction with the potential consumer, I think it's very important to have your insight and that, you know, it's not just for one type, that there's a huge range in that target market as well. So we need to be listening to our customers and, you know, taking their feedback and incorporating it into what we're doing on the development side. Of course,
and the best time to do that is before you even start building, right?
Exactly, exactly. All right, well, thank you. Over to Matthew.
Hi, I'm Matthew Pullen. I look after the build-to-rent program at EcoWorld London. EcoWorld's a Malaysian development group, as some of you might know. It's only fairly recently established in the UK. My background wasn't residential. I became involved in it about 8 years ago, and that was really driven by two things. Firstly, looking at the sector, seeing what had happened in student accommodation and believing that as preferences for our target market were changing from product towards experience, that the residential sector seemed to be out of step with what was going on. The second thing was noticing that pension funds at the time were, after 2008, were really short of reliable, long-dated, inflation-linked income and looking for stuff to invest in. It just seemed to me that putting those two things together was an obvious thing to do. So that translated itself into me launching a company called Be Here at the start of 2013. That was one of the first specialist build-to-rent developer operators in London. 5 years on, as that started to grow, it was acquired by EcoWorld as part of a wider corporate deal that saw EcoWorld establish itself with a team in London.
That's great. I appreciate that from everyone. And I just wanted to give a quick statistic to talk about the growth of the build-to-rent market. So in the latest report on build-to-rent for 2019 from the British Property Federation, from Savills and Mollior, we have 72,000 units in planning in the UK. We have 37,000 under construction, and we have 30,000 complete. And that is a 13% increase from 2018 total. So I think that just shows you the appetite from developers, contractors, I think, you know, different types of companies coming into this space. And I think that also the appetite from institutional investors is just growing. So I think, again, this is a hugely relevant topic, and I really encourage a lively debate during this. So let's start out. For Ami, I want to talk a bit about sustainability. And what parameters are you planning to build into your design for build to rent? I know a lot of people talk about sustainability, but what does that actually mean to you?
Right, so obviously it's a very topical issue. It's been brought back to the table in some ways by what's gone on recently with Extinction Rebellion and all the furore about sustainability, and rightfully so. I think the built environment has a massive responsibility to deliver on this sustainability agenda. We've got we've got a scenario where we are responsible for a huge amount of the energy consumption on the planet, and we are also responsible for a lot of the greenhouse gas issues. So that's most definitely on the agenda, has always been with Amro. As far as student accommodation goes, I mean, we've got a 100% track record of delivering BREEAM excellent schemes. Some people might think that's just a tick box exercise, but actually, the reality is that whole discipline of doing a BREEAM excellent exercise makes you much more rigorous in your design capabilities and your design standards. We are looking at applying a similar sort of scenario to build to rent, but I think what we're going to do this time, and we're looking at this very closely right now, is to open up the discussion and make it more holistic. So sustainability can be many different things to different people. And the whole well-being issue, I think, is also very much on our agenda. Looking at inside-out design parameters that mean that, well-being in terms of indoor air quality, measuring performance of, our temperature control methodologies, etc., is really important. Also, I mean, Build to Rent can be so many, the opportunity and the canvas is so broad for sustainability. So if you really take it to another level, it's all about human-centered design now. And we are really looking at it from that perspective. What kind of place do people want to call home? When you come back home after a hard day at work, you want the familiarity, you want the sociability, you want the feeling of this is where I'd like to live. And that can mean a lot of things, not just ambient temperatures and air quality. It's about how we extend our design to create an empathy with our tenants and our customers. We consider all of that to be part of the mixed bag of sustainability, as you call it. So everything from the rigor of building fabric and looking at options that are sustainable in the green sense, to making a place really somewhere that somebody wants to call home to live in.
Are you, sorry, can I just ask a question?
Go ahead, please.
Are you using the well guidelines and things like that, and are you applying that to your buildings? Because I know that it's very big in the US, and kind of it's becoming more utilised in the UK, so I just wonder if that's part of your sustainability.
Interesting, interesting that you asked that, Rosanna. Well has done phenomenally well in the corporate occupier market, commercial property in the US, and it's also showing that in the UK. In the residential sector, it hasn't been applied in the same way. But actually what we're doing, and I think we're just taking a very practical approach, that we want to build in the preconditions for well into our design guide. And if that happens, because that has to happen when the scheme's on the drawing board, stage 3 design, or even earlier if possible, then you actually create a foundation from which you can take it forward. You can future-proof using well in that sense. You can build on, and one thing about well is it really it is super for retrofitting as well. It has an ability for retrofit, so we can experiment as we go along. But having the preconditions in place is key. Otherwise it's difficult later on. Yeah.
I think it's hugely important as well. And I'm just curious, how much are your customers asking about sustainability, or do they just expect it?
So we have our first Build to Rent scheme on the drawing board.
Okay.
But we've been doing a lot of research, and absolutely sustainability there's a whole vernacular around sustainability, and if you really look into it, like I said before, I think customers are asking for well-being. Customers are asking for how is this building going to, where is the energy going to come from? What are you doing about green energy? How are you building insulation in? How is this, overheating is a massive issue. We're talking about a 5 degrees Celsius growth in terms of temperatures and summer temperatures, etc., going to extremes. And customers do want to know that. Are they going to be comfortable living in this property, come what may? And I think taking on those sound bites and incorporating them into design is really important, because the data will follow, I think, especially for this. I think the data will follow. The payback period might seem extremely long right now, but it's absolutely the right way to go.
I think it's also explaining to your customer base in a logical and kind of very clear way what exactly you're doing is very important as well. I think that's a great segue into chatting with Matthew a bit about generally the shift in the way people think of homes. So when we think of the residential sector, again, it's not just as a product, but a bundle of services and community and a lifestyle choice, which is that's a big shift into the way that we used to think about things. So can you talk a little bit about how you are approaching the relationship between the customer and your Build to Rent offering, and along with the community as well?
I think one of the first things that struck me in looking at the sector was the fact that there's a disconnect, it seemed to me, between house builders producing stock, a lot of it now being sold to overseas purchasers, let out by an agent, and somebody living in it. And I think one of the problems with that is that it means you've got a market that doesn't really function properly, because what the customers are actually after has no bearing on how much the developer gets paid. The developer's got no direct link to even get the feedback. And from that perspective, it doesn't, I think it feels to me like the market is rather broken in that respect. And you don't need to look too hard at the way that property is marketed in London to figure out there's a bit of an issue. There's a lot, you don't have to look very hard to find examples of, property in East London aimed at people who like to spend their time in Shoreditch that's marketed with, as breathtaking contemporary apartments and designed in a kind of slightly lame boutique hotel type of a style, which, it only says there is no connection between the two. And I think the way that we always approached it was to try and bind these things together. And for build to rent to work properly, it's got to be a combination of three things working together, I think. One is, the interaction with the residents. One is the development side of it. And the third is the investment. Because those things, the whole thing will only function properly if one informs the other. It's got to be decisions about where to buy land, what to develop, what the mix should be. All of those things have got to be driven by resident experience in the first place. I think we're still, in truth, at the very early stages of working out how that plays through in terms of community. One of the things that's helpful from our Malaysian experience is that whilst the development that the company does in Malaysia is for sale, not for rent, the scale of it just means that you can't build places and walk away. And one of the sites at the moment we've already delivered 5,000 homes on the site, and there's another 500 acres to go before the development's finished. And in developing at that sort of scale, obviously you can't get away from the fact that people are going to be able to see what it's like to live there when they're making a choice about whether to buy. And that puts you in a much better mindset, I think.
It's very true. You're invested in the long term because you're going to be there.
Yes. I think one of the key things I learned early on from experience from the States, I suppose, was that there's a real focus there on community and tenant retention and encouraging people to want to stay there. And I think in London, because the market has had this undersupply of homes, and a lot of those homes not really being what a lot of 25 to 40-year-olds would want, it's enabled the market to be a bit lazy. And actually, it's useful to bring in some of that experience, both from Malaysia and the States, I think.
I think it's very true. It changes from being, it becomes more customer-centered, doesn't it? And we're trying to get feedback, and we want to keep the customers happy.
But it only works if your business model really relies on people paying more to live there, wanting to stay there, and that's how you generate profit. If it's all separated in house building and operation, it doesn't work.
However, if you are investing at scale, then you can be more efficient with your systems and your people and processes generally, and then it's a better experience, I think, for the consumer and just overall. I know a lot about what you're talking about on the feedback loop. I think is so critical because sometimes we tend to design in a vacuum, and I know that happens sometimes with us too. I really say to our teams, our design teams and our development team at Greystar, you need to get feedback from our existing developments. We've just opened up our first multifamily project in Canary Wharf. And I try to talk to the team whenever I'm there and say, what is the feedback? What are the customers telling you? What do they like? What don't they like? What spaces are they using? Which spaces do you never see them in? Because that's so important for us.
Well, from what we found so far, people are so willing to spend the evening. You might have to incentivize them with some pizza and a beer, but people are very willing to tell you what they like, what they don't like, and contribute towards the growth of the business, and then making the right decisions about the next thing we do.
Exactly. People just want to feel heard and valued. So, but I think we'll move on to talking about design in the build-to-rent market. So, Rosanna, I'd love your opinion on this. Like, how important is design in build-to-rent, and what can go wrong if design is an afterthought? Because I get told a lot of times from people, we look at a lot of schemes that come through our desk that are maybe already designed, and people say, oh, well, we'll worry about the management, operational constraints later. And so I'm just curious your feedback on things like that.
I think design is hugely important. I think true build to rent is the actual genesis. If it doesn't look right, if it doesn't feel right, it's not going to work right. It's like any development. You know who your target market is before you start building, and then you build for that target market. If we're doing high-end residences in New York, we research our target market, we know what they want, and then we create the product. We don't retrospectively do it. And what we've seen in the build to rent market is that people have taken standard apartments and they've tried to shoehorn the build to rent concept into that standard apartment, and it's just not fit for purpose, and they're just not successful. So I think design is at the utmost important, and I think it's got to be at the beginning, right at the beginning, that first thought, what is the purpose for this, and how are we going to get there through our design?
It's so true, and it's hugely valuable, I've found, to have your operator sitting there with you, with your design team at the table at the beginning, like you say, from day one, talking through, like, how does this work? How does this work from the walk of the customer, from the walk of the operator? How does it actually practically work? And going through each piece, I know it sounds a little bit basic, but when you actually sit down with your design team and you say, okay, walk me to the front door, how does it work? How do you call the call box? How do you then, you know, if you have on-site teams, how does that work? How do they see the customer? How do they talk to the management team? All those things, it has to flow, or else your building doesn't operate effectively.
One thing that's quite apparent, you know, you see it a lot in the US, is the recognition that you've got to adapt, and the idea of, I don't like the title of build to rent at all, and I think it confuses people as to what the industry's about, because it's not, you know, it's not a construction thing. You know, we've got to get away from building stuff and then thinking that's it finished. But that, you know, a key part of it has got to be, you know, whatever you do to plan, people, you know, the way people use the building and people's needs over time are going to change. So that flexibility is, fundamental to it, I think.
But I think that's a massive part of the design. How how do we create it fit for purpose for today, and then how do we preempt what our needs in an ever-changing market are going to be in 5 years, and therefore how do we use things like design and technology to ensure that this product that we're creating is still relevant in 5 years' time or 10 years' time. And that's where it comes right back to the beginning. What do our target market want, and where is that going, and then how can we future-proof our product to ensure that in 15 years' time or whatever it's still being used.
It's very true. I think that's a design challenge that we all have, is that the minute you specify something, you know, by the time it's being built, it's a couple years down the road. And how do you make sure you're keeping up with those technology shifts and changes?
And there's need for the investment side as well to keep up with that philosophy of the feedback loop. I mean, when you look at the main way today of funding build to rent, it's the forward funding model that's prevalent, and there is that disconnect already. The discussion that we're having now is one where you want to encourage a vertically integrated approach. So you want to have the developer having a stake, or at least a vested interest in the operator, and the whole design then hanging together in that basis. And the investment model doesn't necessarily support that to the extent it could through JVs and partnerships that are very common in the US, but a while to go before they come to the UK.
I agree, it's a constant challenge. But on that topic, let's talk a bit about operations. So can you talk to me about your ideas for operations and how you're doing that at your company and how important that is in the build to rent?
Yeah, so the one thing we've learned from our student experience is that the customer has to be the center of focus, and everything we've spoken about today, obviously, all of us think in that same way. We think of ops as being our secret sauce, really, at Amro, and we're really proud of what we do with our ops. We're very hands-on in terms of what we're trying to get in terms of messaging to the customer, also in terms of the feedback loops, etc. For a long time, it has been very much a human interaction, but as we scale, we know that we can only do it if we're properly tech-enabled. So at every point in our journey, we try and engage with technology to make that journey more pain-free. We're looking at all sorts of stuff right now, from the discovery to the conversion phase. So a lot of the discussion that's going on downstairs and on the other stage would be very applicable to what we're trying to do here. Everything from making that sort of good data, creating a good data foundation, if you like, on which to build our understanding of what our customers really want, what we talked about earlier, understanding and getting deeper insights into what our customers want, and being able to service them correctly. And we see that as like a gap between knowledge and service, if you like, if that makes any sense to you. It's when we have the knowledge to deliver the service, but it's how we deploy it, how we make our service on point, how we make that interaction, that human interaction on point and more acutely engaged. And we use technology in many ways to help us to do that. We really couldn't do it without that. So obviously we live in a mobile-first world. It's all about, we sit there designing our schemes on massive screens, but the decisions are made on tiny little handheld devices about whether to rent or not to rent. We've got to approach it very much from that customer perspective in terms of how we communicate, what we communicate, and also the richness of that engagement, because that is what I believe will create better monetization.
Yeah, that's so true.
Yeah.
I think on the operational piece as well, as you're talking, it makes me think of how important it is to train our operational teams, especially if they're going to be working in our buildings on site. And I think, just explaining the ethos of the constant customer facing, because a lot of times that's the first interaction a customer will have if they go in and they want to go on site and see your building. They might first see if you have a concierge or if there's someone working on the management team. That's their first interaction. That's their first introduction to your business. So I think how those teams are trained is hugely important. And again, with social media, I think we need to make sure we're training for things when things go wrong, and we're equipping people with the tools to be able to respond appropriately, because things will go wrong in a building when you're managing people. And I think, it's just better to be upfront about that.
And I mean, to say the obvious, I mean, a lot of the customer experience is digital these days. So your first discovery process, up to about 80% of the time, you're going to make a lot of your decisions digitally, especially when you're living in all parts of the world and you're arriving in London and you want that place to stay, etc. So catering for that funnel and making sure that we create a pain-free journey is what we focus on.
Absolutely. Yeah. And shifting a bit over to talking about, Matthew, your experience from the US and how you use this to shape how you approach build to rent in the UK. I'd love to hear a bit about that. What's different? What have you learned? What can you tell the audience?
I suppose at the point when I got started in the area, the US was really the place to go to see some proper build to rent product. And I think that, thinking back to the first build to rent development I saw was a building called Mercedes House in Manhattan, which is, I suppose it reinforced one point very firmly, first of all, which is that renting is not just for people who can't afford to buy, because the average salary there was over $200,000, and it was, quite something. And actually, they didn't have an apartment we could look at because it was full. But I think it's very easy to superficially look at the States and what people call the amenity arms race and so on, which is a bit of a slippery slope, I think. You can, it's gone an awful long way beyond swimming pools. And I know pet manicures, all the rage in multifamily now. And, there's all of that going on. But actually, when you scratch the surface, the most important thing, I think, that I found from it was this service mentality. And it's obviously different when you're in a market where you need to encourage people not just to go and live there in the first place, but to stay there for as long as possible. The focus on tenant retention is key to it. And I think the adaptability of the service. And I think I went to see one building in Dallas, which really stuck with me, where I think it wasn't the most glamorous building. Obviously, it had a pool. They hadn't even got a pet parlor, so it was, perhaps a second tier. But what they've done over time is just adapt the service continually to really suit, a particular target market. In this particular case, it was people who worked in the oil industry. Again, they're quite well paid, very much cash-rich, time-poor. But they'd adapted the service, and they were responding to demands all the time. So it was shifting And it's that was optimising the value of it and the income, far more so than the building itself, I think, because there were flashier places to live in Dallas, but it was doing the best.
Absolutely. And it is around the service, isn't it, and the offering and what
Yeah.
that lifestyle choice.
And I think one thing that certainly struck me talking to the guys who own the building was that, they really hadn't predicted who it was going to appeal to in the first place. And
I think it's a really good point. I think we all are learning. We're on a discovery. And I think one of the big things, I used to work in build-to-rent in the U.S. doing development before I moved here 6 years ago. And we were always learning, even though we had so much data, everything was transparent. You know, we were friends with our competitors. We tour around their new developments. And, you know, you're so right on the amenities arms race because I was in that. You know, your competitor builds an infinity pool, then you have to build the next thing, and it just keeps going and going. But at the core of that was always the service, and the customer was always at the center of that because we knew that the competition was so tight that if you did not offer exceptional service, they'd be out the door. They'd go to our competitors. So the expectation was just so high. It was really fascinating.
I think one other thing that struck me was that I think it was a 6,000 home development at one point, and the way that it was broken down and the focus on encouraging people to get to know their neighbours as a means of, to be honest, it was as a means of retaining them with the idea that you get to know your neighbours, you stay for longer. But that sort of breaking down of communities to very manageable sized chunks, where you know the people who live around your square, you know the people who live around your amenity, whether there's 300 or 400 homes there. It's that drives it, I think, and not some of the superficial stuff.
Absolutely. Are we out of time?
Yeah, I'd hate to break in, but we've got 5 minutes for questions from the floor. Please do put a hand up if you want to ask a question. I think you were first, and then a couple there. We've got roaming mics, so 1, 2, 3.
Hi, Richard Kennedy from Project Stackhouse. What do the panel think the build-to-rent developer and manager's role is in providing affordable housing, particularly here in London, where there's an acute shortage of affordable housing?
So I'm happy to I know I'm the moderator, but I'm happy to answer that, and then other people. So as a participant in the build-to-rent market, I know what we're trying to do as Greystar is encourage the discount market rent product, which would be able to be managed by operators that are not registered providers, but it would be a discount to our market rents, a combination of that and London Living rent. And that's what we're trying to do so that we can offer one product that we are the manager, and I know a lot of our colleagues are trying to do the same, and our competitors, so.
I chime in with that. So we've also done the same. We've got a discounted market rent product, an intermediate income linked product, and a London Living rent product as part of our scheme. And it's all pepper potted. It's all it's part of the same scheme. There's no real difference. I think Greystar is doing the same.
That's
right. You wouldn't know the difference if you walked into an apartment whether it was one that was being offered a discounted rent or not.
Okay.
Exactly the same.
Just conscious of time, I want to give as many people a chance as possible. Just a quick question.
One from Wonderwall. My question follows on from that question. As developers, how much do you think Section 106 contribution to build to rent is actually stifling the fact that you could bring down your prices if Section 106 wasn't part of build to rent?
For those that don't know, in the UK, Section 106 is a payment on planning condition payable to the local authority. It's a big controversial area.
We actually like to say that we have a conversation with the authority, the local authority we're dealing with, to try and encourage them to spend the 106 within the vicinity of the scheme for public realm purposes. And I think that can be a real kind of good quid pro quo. We don't have an issue with that. They're probably the better people to spend it than we are. They have a larger control of the master plan, and if they're giving back to that community, we don't really have a massive issue with it, actually. Yeah? Would you agree?
Another gentleman there, yeah.
Nick Robinson, BNP Paribas Real Estate. Clearly the retail sector, and especially the shopping centre kind of segment, is in crisis. Do you reckon the demise of that sector provides BTR with a unique opportunity, and I guess what would the challenges be on top of that?
I'm sorry, I didn't get the full question.
Do you think the demise of the shopping centre sector could provide an opportunity for BTR, and what would the challenges be for that?
So resi and retail, it comes up quite a bit at the moment. Can you see residential over shopping centres, over malls? Anybody got experience of that?
Sure. I mean, well, I'll give a quick answer. It's something that we're looking at a lot. I think there is a massive opportunity. I think it makes a lot of sense to have a mixed use development, and I'm sure our other people on the panel are looking at it as well.
And certainly we are mixing some uses. We've got a build-to-rent scheme that's going to be on top of a leisure centre. We've got build-to-rent scheme that's embedded right next to a football stadium. I think the key thing is that, you know, residential for rent is easier to deal with in a lot of respects because it's focused on what people want today, and people aren't, you know, if you're buying a home, I get the fact that you might be slightly nervous if it's on top of a shopping centre or whatever else it is, but actually for rent, you know, a lot of it is so driven by location. I think it's certainly an opportunity, and you know, I do think there's an awful lot of people that want to live in towns and cities more centrally than the housing that's available, and I think certainly that, you know, town centres present a great opportunity to bring people into rented accommodation right in the centre and make them more vibrant again.
I think there are challenges.
There's one question here, sorry, this gentleman's been waiting very patiently.
What about return? What will be the target return for the investor that want to invest in build to rent?
Returns, is there a target return?
Target return.
Target returns. Target returns, is anyone willing to share?
So the MSCI index on Resi has recently, that was published about a few weeks ago maybe, published total return for build to rent. It's obviously a proxy for build to rent. It has some PRS in it as well, for about 3.75% per annum.
Anybody else want to share any numbers?
Yeah.
I think clearly a lot of investors look not just at the annual return, but as, you know, if you look at build to rent on an 8-year model or whatever, you can tend to get yourself to a IRR that's more than 8, I would say. So it's not, you know, that's a lot of the attraction for pension funds that you know, in reality, there's not an awful lot of things that you can safely invest in that give you returns at that sort of level.
I think it does depend. I would just say I think one of the major drivers to this is that it's long-term stable income. And again, I think in the States, I know that it was always considered a very risk-free asset class where everyone was, you know, on the waiting list. They were trying to invest and be the lenders. There were long list of people trying to get in, and I think that will make its way here, and it will, as the market matures, will continue down that path.
Okay.
I think the one point I'd just like to add to that is that build-to-rent should be seen as like an infrastructure investment. It's the best way to compare it because it is housing infrastructure.
Okay, question there, yeah.
Hamilton on their Irish portfolio in the build-to-rent sector. I think you touched on sustainability. Hamilton are really strong on sustainability, and I think, Amy, you mentioned standards. We're actually looking at BREEAM, which Hamilton obviously understand from a commercial point of view, but people I talk to on the residential side, they look at me as though I've got two heads. Are you looking at BREEAM, and why aren't people doing BREEAM on residential?
Right, so BREEAM is a standard that we've got a 100% track record in achieving. We've achieved BREEAM Excellent on all our student accommodation schemes. It hasn't been, the BRE guideline hasn't applied it to the C3 asset class, the use class rather. So the Code for Sustainable Homes was the comparable accreditation that I'm not sure why it's fallen away for some reason, but I think the WELL certification actually brings in all the conditions. I mean, just from our knowledge about BREEAM from student, it brings in all the conditions that BREEAM would bring in for sustainability, and on top of that includes well-being standards for residents. So I think it's a much more robust accreditation actually.
Okay. Did I see one final? Yes, there was a hand, yeah. The final question, we'll take one from the app, and then we'll move on. I know there's people gathering for Spacemaker up next.
Hello, it's Williams from Behind Living. We are seeing an increasing number of, specialization with the the build-to-rent sector. So the emergency of different operators concentrate on different niches of the market or segments of the market, like student living, co-living, and many others that are appearing. How do you see that's evolving in the future, and where is it going to lead the sector to?
Okay, anybody want to take that?
So I was just going to say, in terms of, if you think about who the target market is and the target audience, a lot of people automatically think about millennials, and you start thinking about what we care about, and the Extinction Rebellion. I know that I was on the street protesting the other week because that's something that I deeply care about as a millennial. And I think what you're going to find is that your brand is going to be, and what you go into is going to be of utmost importance, because your target market is going to want to be able to relate to your brand and see that you care about the same things they care about. Your buildings are going to have to be sustainable because we can care about environmental issues, and that therefore means that there are a lot of places within the market for people to do different things, as long as their brand is strong. We want to find somewhere where we belong, where we relate to people, where the people that are living there have the same beliefs that we have, which means there are a number of different ways to approach it, but your brand in such a competitive market and your offering has to be strong, it has to be inclusive, and it really has to be kind of desirable for who your target market is.
I think that's right. I think whether it's co-living, micro units, build to rent, I think at the heart of all of that is how are you offering that quality and that service to your customer, and making sure that you're consistent in what you offer. I think that's really, really critical in this market, in this emerging market, because it is still emerging.
And as long as affordability is an issue, which it is, let's face it, living in cities is not cheap for lots of people who want to live in cities and need to be in cities in many parts of the world. As long as that remains a crucial kind of touch point, we are going to have to be more innovative about the sorts of accommodation we offer, quality accommodation that we offer.
Okay, final question. Which build-to-rent concepts can us smaller landlords implement into our often fragmented portfolios to add more value to tenants? A question on the Future PropTech app. Any quick tips for smaller developers, smaller landlords to adopt concepts from the larger build-to-rent world?
Better service, I'd say. Yeah.
Okay. Short and
it's
sweet.
an easy one, yeah.
Great. Okay, please join me in thanking our panelists. Fascinating debate.